Thank you, Faizan. Good morning, everybody, and welcome to the Q3 FY21 results conference call for Tyre Industries Limited. We have with us from the management, Mr. Arun K. Bajoria, Director and President, IO, Mr. Sanjeev Agarwal, Chief Financial Officer, and Mr. A.K. Kinra, Financial Advisor. I would now like to hand over the floor to the management for their opening comments. Thank you, and over to you, sir.
Thank you, Rishad. Thank you very much. Good morning, everyone, and a warm welcome to JK Tyre's Q3 Financial Year 2021 earnings call. And thank you all for joining us today. I am Sanjeev Agarwal, and I have with me Mr. Arun K. Bajoria, Director and President, International Operations, and Mr. A.K. Kinra, Financial Advisor. Firstly, I wish you all a very happy New Year 2021, and I hope that all are doing very well. Now, coming to the performance, it was an excellent quarter on the back of sharp recovery in economic activities, festive seasons, personal mobility, and good monsoon, which resulted in uptick in demand for tires across segments. This all resulted in highest ever sales and profitability in any quarter for the company. The total consolidated sales were recorded at 2,776 crore as compared to 2,207 crore in the corresponding quarter last year, registering an increase of 26% on YOY basis. Operating EBITDA doubled to rupees 507 crore on consolidated basis with a margin expansion of 690 basis points. The main focus during the quarter was on increase in sales volumes through network expansion, improvement in operational efficiencies, strict cost control, and working capital management in terms of faster cash conversion. JK Tyre's two operating subsidiaries, Tyre Industries Limited and JK Tornel, Mexico, have also performed remarkably well and have significantly contributed to the sales and profitability on a consolidated basis. The capacity utilization was close to 96% during the quarter. The replacement segment, along with the OEM segment, were the key growth drivers. The strong export performance in Q3 of the financial year 2021, in spite of the challenging and volatile global environment. The strategy of enhanced market coverage, developing market-specific products, focus on brand building, and strengthening our presence in critical markets have resulted in a good growth in Q3 of this financial year. With increased customer centricity, we are confident of continuing the growth in our exports in coming quarters as well. So now I request you to open the forum for the question and answer. And I would request Mr. Arun Bajoria to add to anything if he would like to add to the commentary.
No, thank you, Agarwalji. Let us start answering their questions.
Sure.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. Congrats on very strong set of numbers during the quarter. So firstly, obviously, October, November was very strong. So how do you see the demand trend post-festival, like December, January, how are you seeing YOY growth trends in aftermarket?
I would imagine that the demand will continue, mainly because there is better capacity utilization and the vehicle utilization, particularly now that things are picking up, and normally you have seen the quarter 4 is always one of the better quarters, being the year-end quarter. And then we are also seeing the OEM turnaround, because Q3 was certainly better than Q2, and Q4 is already appearing to be better than Q3. So, and as you know that OEMs are taking our, the tires for the trucks, the buses, as well as the cars. So that is another thing which is going to continue our uptick, and also the rural demand. And lastly, but not the least, is the government infra spend, because government also for the last quarter is always trying to finish off all the allocations of the funds. So these are some of the reasons, and that is why I would say that we are optimistic about the Q4 as well.
So sir, you mean to say that even in the January, the utilization levels have remained on the high side, 95% around that level?
Yes, absolutely. This is exactly what I'm saying, that the utilization is continuing at 95%.
Okay. And secondly, that now that you are operating at such high level of utilization, what is the expansion plan you have basically on different categories of tires?
See, for the time being, our expansion projects are on hold, although some of the equipment for our truck bus radials has been ordered before pandemic. But then when we saw that everything had come to a standstill, we have put even that ordering on hold, and the suppliers of the machinery and equipment are ready to start supplies as soon as we give them the green signal. So we will take a call once we see demand being sustained, and which will be necessitating more output. So that is where we are. And please don't forget that we still have a couple of percent points in the capacity utilization, and because we have in the past also exceeded 100% capacity utilizations. So already we are seeing that in the 2-3 wheeler in our Cavendish Industries, the newly acquired subsidiary, is already exceeding 100% output at this point of time in the 2-3 wheeler sector.
Okay, sir. And see, if you go ahead with expansion that you had planned earlier, in how much time that TJ capacity can come up, and what will be the size of the plant, new capacity basically?
देखिए अभी उसके बारे में नहीं, we should not be talking about that at this point, but it will certainly add to our top line, I can assure you.
Okay, sure. And what will be your net debt position as of December, and how much debt we paid in this year so far?
Mr. Agarwal, would you like to take this question?
Sure, definitely. So I am really pleased to inform the forum that we have reduced in the last 9 months period almost about more than 1,000 crore rupees of debt. So at the beginning of the financial year 21, we were at 5,500 crore plus kind of a debt, including the short-term borrowings. And today, at the end of 31st of December, the borrowings have come down to 4,500 crore rupees. So in a way, we have reduced this by 1,013 crores to be specific. And further, we are focusing on reducing it as we go forward. And we are hopeful that as per the scheduled repayment obligations which we have, so in next 2 to 3 years, we will reduce the long-term debt by almost about 45-46%.
You mentioned that it was 3,500 crores as of March, and now it's 4,500 crores, right? That's a 1,000 crore reduction. Okay.
1,013 crore reduction overall.
Okay, I got it. And so lastly, if I may ask, sure. Okay.
May we request that you return to the question queue for follow-up questions. Thank you.
I just want to add something what Sanjeev has just said, that this debt reduction is on the top of a much higher capacity utilization, where the working capital required is much higher. So keeping that in view, that we have reduced it by 1,000 crores is very commendable.
Very important, Mr. Kindra.
So I just said that this debt reduction on the top of a higher capacity utilization. So that is point to be when you utilize your capacity higher, there is a need for higher working capital. But even then, we have reduced our debt position by as much as 1,000 crores.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Thanks. Congrats, sir, for a great set of numbers. Just wanted to understand what is the quantum of price hikes from a blended portfolio perspective you have taken so far, and what is the raw material basket inflation with a lag effect you are looking at in next 2-3 months?
Thank you, Mr. Banerjee. Our price rise has been hardly anything. If at all, I would say that we have slightly inched up the prices somewhere towards the end of December. And going forward also, we will only resort to price hike if it is completely unavoidable. And I can tell you that our profits, which have increased, as you just heard in our opening remarks, are more from overall efficiency improvements, overall fixed cost reduction, overall all-round improvement in our working systems and in our working more smartly and so on. So really, if you see, it is a completely new, very efficient way of working that has been evolved in JK Tyre, and going forward you will see more and more of that. So really, we have to see how the raw material prices shape out, because they are likely to firm up moderately in the next couple of months, and we will have to definitely see if there is a need at the end of the whole thing.
So basically, from a ballpark perspective, if I see natural rubber prices being up from 120 to 155, 30%, and crude also being up from $40 a barrel to almost 55, which is a 40%. So the crude derivatives may not move up in sync on an absolute percentage basis, but directionally. So key raw material basket constituents are up almost 30% from Q2 levels. Now with a lag should hit raw material basket, where raw material to sales is roughly 60% on an average for the industry.
Yes.
So 30% inflation on 60% means 18%. Even if I take a 10-12% number, which is quite significant, which is required to do necessary price hikes. So I can see your raw material to sales have reduced 150 basis points sequentially, but almost double-digit price hikes would be necessary down the line to maintain the neutrality. So just from that angle was trying to understand, sir.
Yeah, well, I can give you some indication that if at all we do anything, which we will take a call as soon as the budget is out on the 1st of February, then it may be in the range of about 2 to 3%.
So if I may add to what Mr. Bajoria said, in addition to the operational efficiencies and what we are planning, basically we have been also focusing on premiumization of our product range. So that is also going to contribute to the profitability, higher profitability in time to come. So the premiumization has already started, and some of our products, like for example, high performance tires or the smart tires. So those are the kind of products which are adding to the profitability. And so those things will take care of any increase in the raw material prices, and we are hopeful that the things will improve in our favor in future.
That's great. And second question, sir, with the debt reducing despite rising revenue and working capital as Kindra sir highlighted, so I can see interest outgo this quarter was around 107 crore, against last 4-quarter average of almost 130 crore. So which means almost 20-23 crore quarterly interest outgo reduction. So down the line, shall we expect this level or further lower levels on a quarterly basis? Will it be right to assume?
So in any case, in the last 9 months, again, I would not be giving you the quarterly figures, but in the last 9 months, we have significantly reduced the percentage of the rate of interest per se. So that is almost about 150 basis points reduction in the rate of interest in the case of the working capital, and almost like about 90 basis points reduction in the case of term loans rate of interest, average rate of interest. So the focus is again on this front so that we can reduce the cost in line with the reduction or in line with the soft interest rate regime, and hopefully we should be able to reduce it further with the improved performance. Because of the rating improvement and the performance improvement and lower level of borrowing, I think we should be able to drive some more benefits out of it.
That's great. And last question, was the guided this fiscal and next fiscal consolidated CapEx figure as of now?
No, as I just said to another question, that for the time being, our CapExes are on hold, and we will take a call once we see this demand getting stabilized and sustained, and that may necessitate still more output. In that case, we will certainly revive our project
still from a maintenance
project
CapEx,
expenses.
Basic maintenance CapEx perspective, whatever, without expansion as such. How much?
Yeah, CapEx. That is, of course, that maintenance expenses are definitely going on. Maintenance CapEx is absolutely within the normal range of something like 70-80 crores. Maybe going up to maximum 100 crores in a year. And all the plants, all the 9 plants in India and our 3 plants in Mexico. So all the 12 plants. So it's nothing actually if you see for the whole year.
Sure, sir. Thanks. I'll come back to this.
Thank you. The next question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Yeah, good morning, sir. Congratulations for very strong numbers.
Good morning.
Yeah, I have a question on this Cavendish. So what is the general margin trend for this compared to our JK Tyre standalone? It seems that roughly 100 to 200 basis higher margins we achieved in this subsidiary. So what is general trend?
Yeah, well, Mr. Shah, the main reason for this 100 or 200 basis points higher margin is only and only because in Cavendish, we are still supplying very minimal supplies to the original equipment manufacturers. And more than 95% is up till now being supplied to the replacement market. In fact, even the exports are minimal. So that is the reason you see that the operating margin is slightly higher than the standalone JK Tyre operations.
And sir, we sell something to JK Tyre also, which again goes to market. So there is some double counting, or what could be the common revenues which is factored in both the P&L?
Agrawalji,
explain better. So Mr. Shah, actually there is no, first of all, let me clarify, there is no double counting of any revenue. And secondly, there is a minimal sales from Cavendish to JK Tyre, and only the strategic buying we do from Cavendish. Otherwise, Cavendish has started selling at its own in the last couple of years, and rather in the last maybe more than about 12 months or so, and there is no double counting. So the margins demonstrated by Cavendish Industries Limited are of their own, and definitely these are slightly on the higher side because of the reasons explained by Mr. Bajoria. So there is no double counting.
And in any case, you see in a consolidated accounts, there is never a double accounting. If there is any purchase sale in between the subsidiary and the holding, that is knocked off.
Yes, sir, that is my question. I understand that. That was a question that what is a common which we eliminate because at one point of time we used to sell sizable to JK Tyre from Cavendish and margin sharing happens between the two companies. That's why I am trying to understand standalone margin profile based on this.
So, Mr. Shah, again to clarify, when we acquired Cavendish in the year 2016, and because there was no marketing network separate for Cavendish Industries Limited, there was a sale of the product of Cavendish through JK Tyre in a substantial manner. But now it has been reduced to a very low level now, and only strategic products are sold through JK Tyre. Otherwise, they are selling at their own, and the market is open. Like, for example, in the case of two-wheeler, three-wheeler, there is no question, it is directly sold. Even in the case of TBR, most of the sales is done directly in the replacement market. So there is nothing like that. The sales is through the holding company.
Okay, sir. Last question on TBR. Sir, what is the TBR utilization, and if the replacement demand still remains strong on one hand, and OEM for MHCV now started picking up very strongly, so whether we'll be able to meet the requirement, or is there any other option we are working now?
No, absolutely we'll be able to meet the requirement, because you see, this 95% is the overall capacity utilization, as I said earlier. And therefore, TBR, we are still operating around 90-91%. So we have enough capacity to take care of this higher demand that you are mentioning about.
Okay, thank you, sir, and all the best.
Thank you. We need your good wishes, sir.
Thank you. The next question is from the line of C. Thakkar from ASK Investment Managers. Please go ahead.
Good afternoon, sir. Just wanted the gross debt number at the end of the quarter.
Sorry, sir?
The gross debt number at the end of the quarter.
Agarwalji, would you like to answer? Agarwalji?
Sanjeev, can you reply this?
Hello, can you hear me?
Agarwalji.
So the total debt at the end of 31st of December was 4,536 crores.
Okay, sir. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on a good set of numbers. A couple of questions from my side. You indicated that we are operating at 90-95% across segments.
Yes.
So what's the headroom to grow from current levels? I mean, if demand remains strong, which looks like for at least for fourth quarter, to what utilization levels we can go?
Well, it would definitely increase. I cannot right now forecast the percentage, but maybe 2% or something like that, because see, it has to be aggregated, and truck radials we are only manufacturing at 3 locations, and out of the 12 plants that we have. So that is why there is enough scope, as I said, to increase our production and be able to meet the higher demand of truck bus radials, and also some of it in bias, that is the truck bus bias tires, and some more demand, some more supplies in the passenger car radial. And at this point of time, well, these are all strategic decisions and actions. But just to share with you so that you go back satisfied, we are taking a lot of internal actions in terms of increasing our production from this existing assets. And to just give you an example, recently, which means just about 4 months ago, in our Mexico plant, we were only producing about 12,000, 11,000, 12,500 tires in the car radial category. And we have entered into a completely new incentive agreement with the union in Mexico. And now, with effect from this Q3 beginning, we have started getting, you will be very happy to know that more than 35% output has increased. And now we are getting 15,000 passenger car radial tires per day. So you can imagine that this kind of latent capacities are being activized, and that is how we will increase our output. So you may not see the overall capacity utilization as such, because at that time also the Mexican plant was working at a very, very high capacity. But now we have been able to sweat the assets much more. And when you start sweating the existing assets, that is the reason why you are seeing such a outstanding performance from the same JK Tyre company.
Right. No, obviously, I mean, that is quite commendable, our ability to sweat assets in these kind of times.
And the similar actions are being taken, but you will appreciate that, you see, certain things we are not able to speak openly, because after all, everything, that is where the management, and that is where the strategy, and that is where the transformation starts appearing, and it is visible to the outsiders.
Right. No, that's a fair point. Can you share your capacities segment-wise in India and at Mexico?
Well, you see, I can only tell you that overall, we started in about 40 years ago with 5 lakh tire capacity, which is today at over 3 crore tires of all types. 3 crores. And we are still watching. And as I said, that you keep adding the sweating of the assets which are happening. So if you don't mind, one-to-one, we'll be able to better explain, because you see, again, these are some of the very, very sensitive disclosures. But I can tell you, we have very healthy capacities in truck bus radials, in truck bus bias, in passenger car radial, in light commercial vehicle radials, in light commercial vehicle bias, in tractors. You will be happy to know that at one time, whatever we were producing in the tractor rear and tractor front has been doubled. The output is now doubled in this Q3. Now, please don't ask me how, because that is where our management skills have come into play, and you are seeing the top line growth and therefore the bottom line growth. And I can tell you that I'm not hiding anything, but you will appreciate that there are certain nuances in management which probably no management will like to share, except to show you the excellent performance on a quarter-on-quarter basis.
Sure, we understand that. And lastly, to clarify, in December we had taken 2 to 3% kind of price increase, or more?
No, I'd mentioned to an earlier question that we had done just some inching up in December, toward the end of December. And the actual price increase, whatever is absolutely unavoidable, will be seen as soon as the budget is out and the raw material prices, how they span out, will make us decide whatever is to be done.
Thank you. Mr. Gandhi, may we request that you return to the question queue for follow-up questions? Thank you. The next question is from the line of Lokesh Manik from Vallum Capital. Please go ahead.
Yes, good afternoon, team, and thanks for the opportunity. Just a couple of questions from my end. One was, if you can just share the sales mix between replacement and OEM.
Sorry, sir, will you kindly repeat your question?
Yeah, the sales mix between replacement and OEM, if you can share the breakup of sales.
Yeah, sure. Our replacement sales is in the range of 40 to 45%. Okay. And our OEM sale is again around 40%. And then the exports is something like 10 to 15%. Nowadays it is almost closer to 15%. Okay. And then some of it is to the state transport undertakings for various different states. But that, of course, is not so very significant.
The proportion has remained more or less the same compared to last quarter or last year?
No, in the Q3 the replacement had slightly gone up because, as I had mentioned in our opening remarks, that OEMs were not taking that much in Q1 to Bilkuli, it was a washout. But Q2 and Q3 also, they just started picking up. So maybe 3-4% points up and down, not very significant.
Okay. So my second question is, how much of the growth that you're seeing is driven by the disruptions that on the supply side from that is coming from China for TBR tires that is coming from China in the Indian market? So how much of the growth that you're seeing from that end for your products?
Well, certainly the restrictions on import have given us some tailwind in both truck bus radial and passenger car radial. So in terms of percentage, I have not yet calculated, but yes, few thousand tires in car radials every month and few thousand tires in truck bus radial have certainly added to our top line, because ultimately, but let me clarify that the import restriction is there. There is no ban on imports, and plus there is anti-dumping duty. So you see, and I don't want to discuss the China policy here, business policy, but those guys can lower the price of a tire to an extent of only raw material content. Only raw material. Sochiye aap 60 kilo tires coming all the way from China to India, and they sell it at a lower price than all our tires available in the market by less than 15-20%. How does do it? Let's forget about that.
Correct. So we gained market share from them in this quarter?
Certainly we have.
Okay. And is the trade restrictions then extended to, there was a news in the middle that they were diverting it through Thailand and Vietnam and other countries?
Well, that is happening. In fact, thank you very much for reminding me. That is still happening. There are tires which are coming via Thailand and via Vietnam, because ultimately, you see, they have their joint ventures in Thailand and Vietnam as well.
Right. So has the government taken any action on this? Or steps
not yet. No. You see, you can't make a ban on every country selling exports, because then, you see, these are all reciprocal arrangements, mind you. And if you take any action against a country importing something into India, then they are jolly well going to take something where you are exporting to their country.
Right.
So I think, I'm not speaking on behalf of the government, but this is exactly what is happening and we are seeing on the ground.
Okay.
Yeah.
Okay. Thanks a lot, sir. Thanks for answering my question.
Thank you very much.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Thanks for the opportunity and congratulations for a good set of numbers. Sir, my first question was related to our margins. So if I see last 5-6 years performance, in 2015 and 16 we did around 15% of EBITDA margin, and then in couple of years we did around 11% margin. Now this quarter was almost 18% kind of margin. So on a medium term, let's say over a couple of years or 3 years, what kind of margins are sustainable margins?
Well, our effort is to continue to maintain similar margins because there is no end to improving your performance and your efficiencies and sweating the assets and to make leaner and leaner operations. So definitely our operations are going to try and turn out as best margins as possible, similar to what you've seen in the coming quarter, the last quarters.
Okay. And second question was, can you just give us the breakup of sales in terms of truck, bus, passenger and two-wheeler or tractor?
Well, I just mentioned some of it, which was 40 to 45% from the replacement market and about 40% to, let's say, 39 to 42% to the OEM. And the remaining shared between exports and the state transport undertakings, the STUs. And out of that, definitely the truck and bus is having the major share, being more value tires. And then, of course, the share is to the passenger car radial tires, and some of it is farm. I must mention for all our honorable investors, viewers who are there on this, that rural demand has really given us a fillip in this quarter Q3, and it is appearing to continue in Q4 as well. So that the tractor tires have also added to the top line and also to the bottom line.
Yeah, but can you give a broad percentage, like how much is truck and bus? I understand that since we were predominantly into truck and bus, so percentage would be higher.
Yes.
If you can just give a broad percentage of truck and bus, passenger and farm and two-wheeler.
Well, we'll just skip this for the time being. I'll just calculate. It should be in the range of about 60 to 60%. About 60% should be the commercial tires, including the tractors, and about 30% on cars, and I think the balance miscellaneous, 2-3 wheelers, because in a turnover of, let's say, as Mr. Agarwal mentioned, 2,776, the value-wise, because 2-3 wheeler is the least valued. See, in JK Tires, we have a range where we have a tire worth 1,800 tire, 1,600 to 1,800 the motorcycle tire. 2-3 wheeler tire is still lower, 1,400, and we have a tire which is an OTR tire weighing about 3,700 kilos, which is costing more than 26-27 lakhs. So this is the range of our product. So to calculate exact percentages, I'll try and, but broadly, roughly the range would be about 60-65% would be the commercial vehicle tire, that means the truck and bus, and then the balance would be cars, a little percentage would constitute.
Okay.
And when I say the heavier tires, the commercial tires, I'm including the tractor rear tires also, because a tractor rear tire is also each tire about 12 to 13,000. And of course, the truck and bus, they are 15,000-16,000. And then the truck radial, each tire is about 20,000 rupees each. So you can imagine that, to give you an exact percentage, but the general broad percentages I have already mentioned to you.
Okay. And just one last question. We saw very good improvement in performance in Mexico. Do you think this kind of performance is sustainable now?
Absolutely, sir. Absolutely. As I just mentioned, that the sweating of the assets has been done in Mexico. And so therefore, from the existing current assets, which are on the floor, the output has increased in the last 3 months, or 3.5, 4 months, from end of August, beginning September. So, and plus, we have now started getting many more orders from the North American market as well as from the local market, because there also the production of car radial tires are very much in demand. The bus, truck and bus bias, which is also in normal language known as nylon. So the bias tires, the capacity in Mexico is also running at 95%. So that is the reason where as soon as you see, basically, as soon as your capacity utilization increases, the performance of the unit will automatically improve, and the bottom line will be visible. Improved bottom line will be visible.
Okay, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, sir. Congratulations on excellent performance and such a, really proactive steps taken to improve the profitability. Sir, and we are so, demand perspective is improving, whether domestic or international also, and export is becoming more focused. So what is, sir, why we are not taking, going ahead with the expansion? What is that, threat that are we seeing in for expansion?
No, there is no threat at all, Bharatji. There is no threat. The only threat is...
Why we are concerned? My question is why we are concerned?
The concern is the cash flow. Main thing is the cash flow. You see, you can appreciate that a company of our size, if nothing happens for 3 months in a row, and that also beginning of the year, everything was completely locked up. So that is where, you see, as a prudent management, we thought that first let us start utilizing our existing capacity to the full. And as I mentioned briefly in one of the questions earlier today, that some of the orders have already been placed, but they have been put on hold. And we have requested the machinery suppliers not to supply anything so that we cannot afford to, take out the cash flow in between. Because first we would like to utilize the cash flow for our existing operations. And one of my colleagues just mentioned that as your turnover increases, your cash flow requirements also increase. So our top priority was to first normalize and more efficiently carry on with the existing productions and the sales. And after that, we would see if this is coming in sustained manner, then we will immediately again get down to the drawing board, see the project expenses likely, and go ahead. No threat at all. We are not at all seeing any constraint. We are only being prudent and very, very wise and careful.
Okay, sir. Now, if coming to, that once you decide on the drawing board, that you want to go ahead for expansion. So normally, how many months or it takes to really put the capacity on the ground?
Well, you see, if it is a green field expansion, that is right from the land to the output, then it takes more than 18 months, could be even 20 months. But here, it is not really greenfield. It is going to be brownfielding, which means that we already have the land, we have the buildings. It's only that the machinery has to be installed. So naturally, the time goes down quite a bit. And as I said, that some of this ordering has already been done. So I would imagine that from the time we give the go-ahead, we should see the outputs coming in say about 8 or 9 months. 8 or 9 months.
Okay.
So this particular expansion that is put on hold.
Okay, great, sir. And second question on, sir, working capital side. Now since we have done a lot of work on the improving the efficiency and all, so what steps have you really taken, to bring down the working capital, both inventory side, number of days and creditors? Overall, what was last year and what is the current year? And what are we doing to improve that?
Yeah, Agarwalji, please.
Yes, I will take up that question. So in fact, we have been working on a faster turning of the working capital. So in the sense that about 138 days was our working capital cycle earlier, and now we have improved to almost about 98 days. Right, around 40 days of improvement is there already. So we are recovering our funds faster from our dealers and marketing network, and also the turnover because of the high demand, and also because we have been working on this very efficiently and effectively and ensuring that the products are made available just on time basis to the customers, as well as our raw materials are made available to us in just in time basis. So we are improving upon our inventory storage time period. So both put together actually have reduced the total number of working cycle days from 138 to 98 days. So that is how we have actually been improving upon the working capital.
Okay. It's the last question, because in first half, say 7-8 months, input cost was very benign and as well as low. So how much that has improved, help us in improving the working capital cycle?
So actually, in the first 6 months, not exactly 6 months, rather a little less than that. So we first sold off whatever production or the finished goods was available with us, and then we started slowly manufacturing, because in the initial 2 months this was a complete lockdown, and from third month onward, which is from the month of last week of May and June onwards, the capacity utilization was low. But we kept the sales momentum going on from June onwards, and that is how you have seen that even in the last quarter, that is in Q2, we were able to sell quite a bit, good amount of sales, and good profitability was there even in the last quarter. So faster churning of our finished products.
Okay, thank
That
you.
is how we have helped us.
Thank you very much. That's all from my side.
Thank you.
I just want to add that one day's sale is 25 crore. So the number of days which Sanjeev has given, now you can very easily calculate how much is the saving of working capital.
Okay, thank you very much, sir.
Thank you.
Thank you.
The next question is from the line of Dhaval Shah from Giri Capital. Please go ahead.
Hello. Hello. Hello.
Yes, sir.
Yes, please. Yes, please.
Yes, sir. Yes, sir. Congratulations on fantastic performance. Just one question from my side. Historically, what sort of maximum price increases have you taken in a year? If you would have seen inflation in the raw material basket.
Well, I don't remember exactly, but the price increases have never been more than 2 to 3% on an average. If you take historic figure, if you take 5 years average, I don't think the tire business has ever witnessed any disproportionate price increase in any particular year. I don't remember at least.
Achha. So, but what do you think on like how much price increase the market can digest? Like 3-4% in a
Yeah, I would imagine not more than that. I mean, then it would amount to undue profiteering or whatever you want to call it. So I don't think, because it all depends. One thing we must always remember, sir, that there is huge competition, including imported tires.
Correct.
And therefore, that is a very natural hedge for any local manufacturer to be able to increase undue prices.
True.
At least in the tire, I'm only talking of tires.
Yes, very much. So that's what. So I was checking with a couple of distributors. So I mean, the broad picture what I'm getting is there is not enough supply in the market right now across the brand. There's really tightness in terms of the supply. Because of this restriction and also the demand, which is quite good. Now, from March onwards, I think government is going to give some specific permission. One of the companies, Michelin. So, what is actually happening in the industry? So, as you mentioned, it is not a ban. It's a selective ban the government has done, and the tires which are not made in India, the sizes you can import. So, how do you see this entire scenario panning out?
Sir, I would like to explain to you. Please do not have that impression that now in March the government is going to give permission to one tire manufacturer. But please appreciate that this is a restricted import policy. This is not import ban. Already people are getting licenses. Already tires have come in even October, November, December, and even January, February, March, they are going to come. Lot of licenses have been released. Please, yes, please don't have that impression at all. I want to very, very humbly clarify that the policy, the only thing is that let us say 100,000 tires, 1 lakh tires are getting imported. Now, that import has come down to, let us say, 40,000, 35,000. That is the only thing. Yes. So please, sir, and I'm telling you with the utmost sincerity and honestly. So yes, there is import still continuing, albeit at a lower level.
Correct. So that imports are coming, sir, like the licenses are given to the OEMs or they are given to the aftermarket also currently?
Both. Whoever is a registered tire manufacturer, he has to apply for imports, and then he is given based on his merit.
Okay, so irrespective of if those sizes are being made in India or not?
No. In that passenger car radials particularly, now the tweaking has been done, and that is what I was saying, that has helped, that the sizes which are not being manufactured in India are the ones that are being imported. So there are many sizes still which are imported, but the consumption of those numbers is not enough to justify setting up capacity for that particular higher size of tires, or whichever size for that matter. Even lower sizes, there are some, the quantity used is not so much. So the Indian tire manufacturers also, they don't mind that you can import whatever suits you, and whatever you can import and sell in the Indian market.
Okay.
You understand what I'm trying to say?
Yes. Got your point.
Okay.
And sir, just one question with regards to the mining sector. So how do you see that opportunity emerging? So given in the past couple of years that entire sector was not generating that much of demand. So and we have a good market share in the MHCV and heavy tonnage vehicle. So what is your thoughts on that?
Well, by God's grace, right now that sector is known as OTR, off the road tires, or it is also known as OHT, off highway tires. Both are the same nomenclature. Now, in India, many people are making these, not everybody, not all tire manufacturers, but we in JK Tyre are running 100% capacity output of this heavier tires. As I was just mentioning, that we even make a tire which is 3.7 feet in diameter, and the height of this tire is 12 feet, and the weight is, as I said, 3,700 kilos. So each tire is huge. The cost is more than 26 lakhs each tire. But that is not only size. There are smaller size, big size. But that unit of ours is also running at full capacity.
Okay. Great. And so just last question. Any fundraising plan would you have over next, say, 6 months?
We have answered so many times today since the morning that for the time being we are interested in reducing our total borrowings, and as you see that we have already reduced over 1,000 crores since the last 9 months, the total borrowing. So at this point of time we are not envisaging, but you see, you never know. Let us see what is our future capex and what is going to be our project expenses. And then, if need be, we will certainly do that. Agarwalji, would you like to add anything to this answer of mine?
No, I think you have already clarified the point. So,
I meant more on the equity side. Yeah. I mean more on the equity side. Yeah, the debt you said you want to reduce the long-term debt, but any equity rating?
No, as of now, we are not having any plans for that.
Got it. Okay, sir. Great. Thank you and good luck. Thank you.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yes, sir. Good afternoon and congratulations on a very healthy performance. Yeah. So I have one major question. Since you're just taking 1 to 2% kind of price hikes and your RM basket is up roughly 30%, we should hit this quarter at least. So is 18% margin sustainable range, or it should drop to roughly 15%, which looks more sustainable?
Well, sir, Kanodia ji, I think our effort is certainly to maintain the margins at which we have operated in Q3. But let us see how much of this is going to be our headwind, and that will then determine. But as I was mentioning, and as my other colleagues have also mentioned since this morning, we have taken a lot of measures whereby our cost of production has definitely come down. And that is, again, just to outline that our capacity utilization has gone up significantly. Our fixed costs has come down to a very acceptable level, and our product mix has undergone change. We are now making richer product mix, and by this I mean better sizes, premium sizes, and to better markets. So all this has enabled us to be able to sustain and keep the prices at the level that which they are today. So our effort is, but look, nobody can say with certainty going forward in future whether my margin is going to remain at 18% or it will come down to 16%. Even if it comes down, let us say for a moment to accept from 18 to let's say 16.5. But if I do a higher volume and if my sales increases, then as far as the investors are concerned, we will be still able to show that kind of bottom line. So that is where our effort is, sir. I hope I have clarified.
Right. So this kind of bottom line, so what you are implying is that we can do something like 800 to 1,000 crores of PAT in next 2 years. Is it something doable for us?
I wish I had the answer, and I wish I had the thing to give you the comfort. But I can only tell you that yes, our effort is in that direction.
Okay. Secondly, sir, on the operational capex, right? So in last 10 years history, the minimum spent roughly 200 to 250 odd crores every year. So this should be a normalized range, or the guidance of 100 odd crores still holds true?
No, 100 odd crores. I said somebody asked me clarification that maintenance capex. So in that I had said that 100 crores, but otherwise some expansion or some be able to reach to this existing capacity level, but I will not be able to give you any indication of what will be the average capex spend going forward for the time being.
Okay, because of the minimum also has been roughly on the range of 250 odd crores for us. So even if we kind of probably replace some old machines or some routine work, so it seems that at least
that maybe I mean I may have said 100 crores. It may be 150 crores also. But in such a big operation where the turnover, where the sale is around 10,000 crores, I don't think it's a very major expenditure.
Right.
Capex.
Yeah. So one last thing on the tax rate. I think we have already switched to this new tax regime, right? 25.2%. Despite that, sir, our quarterly tax rates are in excess of 30 odd %. So really, what would explain that? And what should be the blended tax rate for us?
Agrawalji, would you like to take it?
Yes, I will take it up. In fact, in the case of Cavendish, we have moved to the new regime. And in the case of the JK Tyres, this is the same 30% plus kind of the tax rate which we've been paying.
Okay. Understood, sir. And sir, one last thing. Can you share the RM procurement cost for us, natural rubber, carbon blacks for last quarter, and what are the prevailing prices?
It will be a little sensitive for me to give you exactly the rates, but I can only tell you that they were higher than Q2, and Q2 the rate was about the same as in Q1, if that gives you any satisfaction.
Sure, sir. Thank you so much, sir. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Chetan Falke from Alpha Invesco. Please go ahead.
Yeah, good afternoon, sir. Congratulations for a good set of numbers. Sir, if we just compare the realizations of JK vis-a-vis other tire players, so our realizations seem to be on the lower side. I mean, what are we doing to increase the realization? Of course, you spoke about we are making larger size tires and everything. But anything happening on the distribution front or the overall business front to increase our realizations compared to other players?
I am not aware of exactly where is the realization lower or higher as compared to others. But I can only tell you that we have taken major steps in the logistics part of the whole gamut. And our distribution and the logistics have become much, much more efficient than what we thought they were last year. So that has certainly helped us. And going forward, as I said, that all-round improvements in our operations is certainly going to continue to be better and better in terms of our realizations.
Okay. Anything on the distribution side, sir? Or what is the number of distribution or the touch points that we have right now, and how many points we are adding going forward? What's happening on that front?
Well, I can only tell you that in the last 6 months we have added more than 600 dealers, and our active dealership has gone up from 5,000 plus to something like 5,600, and we are continuously trying to increase our reach. And we are now, JK Tyre is available in every nook and corner of the country. And we have taken very, very focused steps in terms of improving our marketing and sales setup. And that is what is going to come in very, very handy in terms of maintaining the sales and also the bottom line.
Okay. So ballpark every year, the network can grow by 1,000 odd numbers.
I think so.
Okay. All right. Thank you, sir. That's it from me.
Thank you.
Thank you. The next question is from the line of Sonia from Federal Bank. Please go ahead.
Good afternoon, sir. So my question is related to the debt. What is the proportion of debt, long-term debt and short-term debt in 4536 codes which you mentioned?
Okay. So the total debt of 4,500 crore, approximately, I will tell you exactly, about 1,300 crore to 1,400 crore is the short-term debt, short-term borrowing, and remaining is the long-term borrowing.
Okay, sir. Thank you.
Thank you. The next question is from the line of Akshay Satija from Alpha Invesco. Please go ahead.
Hi. Congratulations on the good set of numbers. Sir, I just wanted to confirm one thing. So, we actually have bias capacity of 2.2 million tires, and moving forward, that capacity is going to shift towards maybe other bias tires. Sir, is that understanding correct?
Well, 3.2 million you said bias capacity?
2.2.
3.2 million. No, but that is right now completely getting utilized anyway, because you see the bias capacity is being utilized for truck and bus, for light commercial vehicle tires, and then for tractors, and also for the OTR, which I had mentioned, the off-the-road tires and the off-highway tires. So, for the time being, we are not converting anything as such. And then please don't forget the 2-3 wheelers. Out of that, we are making very, very small numbers of radial 2-3 wheelers. So right now, almost about 95% of the 2-3 wheelers are all bias tires. So really, there is lots and lots being made in bias. And of course, going forward, all the bias end use, the bias tires of the commercial vehicles are gradually getting converted into truck radials, because that is how you see that today the truck radial percentage to bias is now 50% plus, and just about 9-10 years ago it was not even 8-10% the truck radial population. So to that extent you are absolutely right that gradually going forward the commercial vehicle bias tires are getting converted into truck radials, mainly because you see the consumption pattern. If whatever you get as a mileage and bias, you get almost 50% higher, 40 to 50% higher if you maintain the tire well, in the case of radial truck tire and bus tire.
Right. So what could be the conversion ratio in terms of, say, we were doing 100 tires of truck and bus. So if we want to shift it to tractor, so can you give me a ballpark number? कितना shift हो सकता है? 50 tires of tractor can be manufactured from that, or 2-wheeler car.
Tractor.
Yeah, if
Tractor,
we switch to tractor.
Tractor, the presses and all are much bigger, but some of them are the same size. That I'll have to calculate really. Calculate.
Maybe a ballpark number, 70%, 50%.
No, I would say that we don't get that much of reduction for 100 bias tires truck bus to tractor. Maybe, I mean, don't hold me on it, but maybe we still would be doing about 75%.
Okay, got it. And so one more question. So could you help me with the utilizations of the Mexico plant?
Mexico right now would be closer to about 94%, 95%.
Okay.
The only thing is that sorry, I'm talking about quarter. Don't take this as the whole year, because whole year is yet to finish in another 3 months, January, February, March. This I'm talking of October, November, December. It is slightly lower because the last 10 days of December we have Christmas holidays in Mexico, so the entire plant is shut.
Okay. And this is in terms of number of tires, right? Or not in terms of tons?
Yes. You can. Well, it's better to take this in terms of the tonnage rather than number, volume, because the volume is little. As I said, in our case, 2-3-wheeler, the weight of a tire is just about 2.75 or 3 kilos.
Right.
Whereas the weight of average weight of a passenger car radial tire is about 9 kilos, 8.5, 9 kilos. And the average weight of a truck tire with a bias or radial is 60. So really, the average, so therefore the tonnage is much more relevant.
So this 94% is tonnage or number of units?
Sorry? This is all tonnage.
This is all tonnage basis. Perfect. Okay. Thank you so much. That's it for me.
Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Sir, thanks. Just wanted to recall how much is your stake in Cavendish now, sir? The listed entities?
It is completely our company. It is our stake in terms of direct holdings and also our subsidiaries. We have Kindraji, would you like to take this? Kindraji.
Yeah.
Our percentage stake in CIL.
Yeah. It is completely our company only. We own 100%. Whether out of it directly is about 71 and 29 is from via our subsidiary Qtr3 in Mexico, and then with an associate trading company in Dubai. But it's 100% owned by Qtr Group only.
So initially when the deal was done, Qtr Group stake was not 100%, I recall. So later on you have added the residual stake, sir?
No, I think right from beginning it is the same.
Yes, partially from the time of acquisition.
Nothing has been added on later on.
So just to clarify, even at the time of acquisition, the company was fully owned by the group, including like Qtr was owning majority stake, and a part was owned by Qtr3, and part was owned by a company in Dubai. Okay. So, and that is the same status. 100% is owned by the group.
Okay. If you ask me, right from the day one, it was entirely owned by JK Group as it continues to be today. Not even 1% has gone outside.
No, so that we agree. I was just trying to understand how much by the listed Qtr entity and how much by outside the listed entity. That's what I was trying to understand, sir.
So in fact, initially it was 84% owned by Qtr, and rather this has slightly gone up because some amount was added by Qtr alone during the last 3 years period, and additional equity was infused in by Qtr.
So that 84 is now to almost to full. That's what I was saying.
Yeah.
Okay.
That's good.
Thanks.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of SB, individual investor. Please go ahead.
Hello, sir. This is SB Bhaiya. You have made two very important statements during this conference call. One is that you have taken a decision of holding your capex for the next few months or years. The second priority of yours is that you have taken a strategic decision of sweating your assets before you decide on further capex. I've been following this company for the last so many years, and what I've seen is that as soon as there is some pickup in the market activity, actually you start spending money on the capex. So, and as of now also you are not making any commitment that how long this capex freeze will continue. So can you make a specific statement that unless your debt equity reaches say 0.8 to 1 or 1:1, your capex for the capacity addition with the and only capacity what you will make is on the maintenance of the assets?
Sir, first of all, I would like to say that whatever is happening in the last couple of years, this COVID and this pandemic was never anticipated. It is unprecedented, and it has really shaken companies. I can only tell you about us, and that is why we had first step was to put on hold all possible capex expenses, because after all, you see, we had to put everything, our house in order, and because we have a lot of responsibility towards our shareholders, towards our own employees, and towards our banks and financial institutions who are our lenders. So, considering all this, we were very, very keen and we were very responsible to first set our house in order, which apparently gradually we are coming back on track, and therefore it will be very difficult to give you a ratio and then to say that when this ratio comes, we will only invest when we feel that now additional capacity output is necessary, because we are still trying to sweat the assets. And I want to repeat that in certain categories like 2-3-wheeler, we are already exceeding 100%, and yet we are able to give more output from the same plant that we had inherited, we had bought out from erstwhile Birla Tyres. So, you see, please.
So, you are absolutely correct, and I can see the results also, and this is direct, actually your results, improvement in the results, to me is a direct testimony of what actions you are taking, that is holding the capex and sweating of the assets. But I am worried that, once you start seeing the improvement in your performance, you again start spending capex without keeping, and this debt equity, I think it is the phenomena known by the financial, people, there is a very accepted, I think, norm, 0.8 or 1 or whatever. So I think actually if you can do that, I think personally as an investor, and I am a sizable investor in your company, I think this performance can be sustained. Otherwise, actually it will again go off the track. So that is why actually, and there is no harm in actually, maybe internally you don't want to share it with us, but internally you can set a target for yourself, unless your company then have again reinvested seeing your performance. But then the problem is that there is a faulting of your capex pattern. So I just want to have an assurance that your debt equity will reach, then only you will again start building on that. That is a very normal phenomena.
Sir, one thing I must, I'm sorry, but I have not been able to get your name, sir.
Sri Vallabh Bhaiya.
Oh, Vallabh Bhaiya ji.
Yeah.
Vallabh Bhaiya sir, I can only tell you that similar comment was made when we acquired Cavendish about 4 years ago. And they said, why have you done this? And it was not necessary. And right now the tire business is not doing well, etc., etc. So, sir, comments are there, but we as promoters, investors in the tire business, and after all, we had taken a view that this is going to really be a very, very good addition to the JK Tyre business. And I am very happy to tell you that if you take a closed unit, we were never given this unit like that. You see, it was a closed unit.
That you have taken, actually it is wonderful, actually Cavendish you have taken, and that is why we are seeing a jump of the company. But I don't want to continue this way, that again you start spending 2,000 crores without actually making maybe your assets rate to the extent of 105% or whatever your other associate companies I'm closely following, and they are sweating their assets to the extent of 110%. So that is actually my humble suggestion to you is, sir, please actually put a discipline on yourselves by holding on your capex till you reach a particular level of debt equity. This is my, and this will actually reflect in your results for an ample number of years. I can tell you that much. You all people are experts in this. Thank you very much, sir.
Thank you. Thank you. Thank you,
But I want to add something what Mr. Bajoria has said. That vision of ours of 2016 is paying us a good dividend now. And going ahead, you will see that the Cavendish sales and profitability will add very much to the total jar business of JK Group.
Absolutely correct you are. Absolutely correct you are. And this is what we have already seen this year. But then actually if you put actually right, my only suggestion is that right, keep a watch on your debt equity before committing the further capex commitment. That is my humble suggestion. Nothing more than that, sir.
No, thank you. It is very, very well.
I would like to mention a point to Mr. Bhaiya. Actually,
please.
Mr. Bhaiya is actually talking about the debt to equity ratio, and ideal ratio in that case is 2. And I am not debating on what has already been described by Bajoria sir. So we have to take a decision about the capacity expansion at the appropriate time when we see certainty about the demand and other things, and when we have already swept fully the assets of the company, existing assets of the company. But just to give you an assurance, we are already lower than the ideal ratio of debt to equity.
Oh, sir, you are expert, sir. Thank you very much, sir.
So we are already on the path of improving the performance, improving the debt to equity. So you should not be concerned about that, and we will be taking the decision in the best interest of the business that as and when we need the capacity, we should expand it, and without giving any commitment or timelines as to when we will be doing it.
Right, sir.
But we will take care of your suggestion.
Thank you.
I think Sanjeev has already mentioned the next 2-3 years' time, we are going to be repaying 40-45% of the term debt. So that itself will correct the position to quite an extent.
Right, sir. Right, sir. Thank you. Thank you, sir.
Thank you.
Thank you.
Thank you. We'll take the last question from the line of Abhishek from Padmaja Investments. Please go ahead.
Yeah, am I audible, sir?
Yes, please.
Yeah. So what is the current cost of debt?
Sorry, can you please repeat your question?
How important your total and your debtors can be decided?
Sorry, your voice is not very clear.
Mr. Please use the handset mode, sir. We are not able to.
Sorry. I mean, is it very clear now?
Yeah, please.
Yeah. What is the current cost of debt?
So the current cost of debt is in line with the current interest rate scenario, which is different for working capital and term loan. And because the term loan is set for 1 year, so we have yet to take the benefit of the reduction in the debt. So still, as I said earlier, we have reduced the cost of borrowing in the case of working capital already by about 150 basis points in the last 9 months period, and in the case of the term loan by about 90 basis points. So we expect that.
Okay. Sorry? You continue, sir. You continue.
And going forward, as our performance improves, the rate is going to come down.
Yes. I already mentioned to you that with the better performance, we are going to get a better rating, and we will be able to achieve a better rate of interest again and get the benefit of reduction. So, but as of now, the average cost is let's say about 7.5%.
Okay. Cool. Sir, another small advice, sir. From the valuation point, our company being the third largest is actually trading at much bigger discount compared to companies like Apollo and peers. I think it is because of debt to EBITDA and the debt to equity ratio. So please do keep in mind when you are doing further round of capex on this particular perspective.
Sorry, we can't. I was not able to make out what you have said. Sorry.
On the valuation point, we are trading at significant discount compared to players like Fiat and Apollo Tyres and MRF.
Right.
And I think it is because of the debt issue only. I think if we can follow that path like the way you described it, that should actually narrow down. Please do keep this in mind, sir, when you're doing a capex.
So we have already explained this point, I think, several times during this call, and our focus is definitely on the reduction of overall debt, right, and even accelerate the repayment of debt as we have done already in the last 9 months, particularly on the short-term borrowing side. So we are taking care of that.
Okay. Sure, sir. Fantastic job, sir, on the earnings again. Thanks a lot.
Thank
you. Thank you very much.
Yeah.
Thank you.
Thank you.
Thank you very much. I think this was the last question. Then we can wrap it up.
As there are no further questions from the participants, I now hand the conference over to the JK management for closing comments.
So, Budhir,
thank you very much. Thank you for all you gentlemen of having given so much time on the results of JK Tyre. And I can only repeat what I have been saying in the last couple of minutes, 1.5 hours, that we are optimistic about the outlook on the tire industry for the next few years and also the JK Tyre performance going forward, since we are hopeful of good growth in this sector in the coming period. And we will keep in mind all your suggestions, which you all have very kindly made. And I can only tell you that we will continue with our efforts to turn out the results better and better. And we will again try and meet you after the Q4 results. Thank you very much on behalf of the management of JK Tyre.
Thank you so much for your patience and for listening to our point of view. Thank you.